The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host who likes to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
And what do we have going on today? Well, the one thing that you always have to worry about during expiration, and that is the well-placed news article that changes everything. And sometimes there's some truth to it, sometimes just a hint to it. But I spent the last hour on a conference call with the authors of the article last night for Remdesivir. Hopefully I'm pronouncing that right, from Gilead. And what they were actually trying to say yesterday when they were with a bunch of folks, fairly interesting to get the backstory from the actual people who wrote the article. It's publicly on YouTube now, at least the interview with the authors. But the article itself, of course, sent the Dow up 800 or 900 points right after it came out. But if you've been living in a cave for the last, I don't know, 12 hours, you know that there was at least some, what would you call it? Possible good news. Maybe that's it. Maybe that's all we need since there's so much negativity. Possible good news about this drug and tests in Chicago. Now, a lot of times you can see what people say, and then you see what people do. And the big point that I came away with it is they went from 4,000 people in the study to 6,000 people. The naysayers that dislike this, a lot of them that were short the market, have a kind of a good point, which is this is not a full study, not a proper study. But generally, when things aren't going your way, you don't expand the study. You maybe leave it where it is, or even bring it back until you can redo some of the things that you maybe change the drug or the doses or anything else, and then you start expanding the study again. So I thought it was rather interesting, one, for the timing, and two, the way it was done. But there seems to be a lot of, it just won't work, no matter what it is. Everybody's consumed or conceded that the only thing we can do is go home and die. Not from the COVID virus, but literally everybody's going to go home. No one's going to plant any crops. No one's going to do anything to actually create any gasoline for tomorrow or canned goods. And eventually we're just all going to sit around and starve to death. So with that on one extreme and the other extreme doing nothing, there's probably some kind of happy middle. I dislike that some people violently attack any possible solution as just something horrible. I don't understand people that don't hope for the best, and I can extend that to plan for the worst. You plan for the worst and you hope for the best, but there are a lot of people that are hoping for the worst. I don't want to try to read their minds, but I will read their character. It is time for a little positivity. As we often say on this show, our happy times are it's hard to be a good trader and always negative. And we try to banish the negative waves.
Don't you knock it off with them negative waves. Why don't you dig how beautiful it is out here? Why don't you say something righteous and hopeful for a change?
Always with the negative waves, Moriarty. Always with the negative waves.
Yes, Captain Steubing in Kelly's Heroes. I forget what his real name, Gavin McLeod. I think that's what it was. Liked him on the Mary Tyler show, but he was quite the guy in Negative Nancy in Kelly's Heroes. And then, of course, we've got the general from Kelly's Heroes, Carol O'Connor, saying, go up the middle. Doesn't matter. Don't stop. Keep going. So you've got to find, kind of some happy ground. But after spending an hour listening to all the ins and outs of it, on balance, you've got to say that it's going forward. It's not going back. So how many times has anybody watched Biotex to only wake up one morning and tell some company in biotech land saying, we've stopped the study, and that's it. That's the most negative you can get. That means that not only did it not do any good, but it probably hurt and maybe even killed some people. And that's it. I remember there was a company, it's now been acquired. I talked about it a couple of months ago, and it was called Quintiles. I think that went boom bust a couple of times in studies because, of course, they were doing things that probably weren't in the best interest of the people. But they pay them like $3,000 to be a lab rat. You just hang out at our place for a couple of months. We'll pay you $3,500 a month to sit there. And we're going to give you this drug. And, yeah, maybe your hair falls out. Maybe your eyelids fall off. You never know. Maybe it's as bad as Alestra. Maybe you were in there for the $3,500 Alestra study, which I won't bring up the side effects, but I think most people remember. But very interesting. Of course, they also, on that same call, talked about the malaria drugs and what's going on. So I can understand to be cautious on this. The question is, did they find a bunch of people that were just minutes away from death and try to give them some Reveza deer? And the answer is no. They didn't take people that were literally minutes away from dying. And, of course, a lot of people say, well, that isn't a good study. Well, I don't know if you wait until somebody's been shot with a gun to then say, well, they were 100 miles away from the hospital, so you blame the hospital. You can't do that. And that's where the rubber meets the road in a lot of these studies is how you pick the subjects. Another thing in this is that the people that did extremely well on this drug were from Chicago, and a great deal of them, higher than the general population, were black. So the question can be, across racial lines, do these things work differently? Well, it seems to be working very well in Chicago. The doctors pretty much signed on to it. So interesting. Can you draw a lot of conclusions? They haven't quit. I think that's the biggest conclusion in these studies before things come out. When they quit, it's bad. We'll be back in a minute.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN is launching an open house for our Tiger's Den. For a limited time, you can get a 30-day free trial to the Tiger's Den. Just enter promo code OPEN at checkout and pay nothing for 30 days while you try out your Tiger's Den membership as part of our open house. With market volatility at an all-time high and people all over the world working from home if possible, TFNN is hosting an open house in our Tiger's Den. The Tiger's Den is an interactive chat room that runs all day where other tigers and tigresses discuss trading ideas with the hosts and members, along with charts and current market news, as well as live access to the charts the hosts use during their programs. Join us for the Tiger's Den Open House. Begin your Den membership today by just entering OPEN at checkout and pay nothing while you try things out for 30 days. For all the details and to start your Den membership today, visit the front page of TFNN.com. Don't miss out on the TFNN Tiger's Den Open House taking place now. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
As we start the show in the second segment, the B block, to be very hyper technical about it. We have the S&P's up 42.5. That's at 2842. Dow up almost 400 points. NASDAQ up, let's call it 36. And the S&P a little bit performing a little bit better, playing a little bit of catch up. What else do we have? Oh, we want to look at the volumes today because we are kind of seeing, and I think we're going to continue to see, volumes decrease both upsides and downsides on up and down days. But as long as the up days are probably more volume than the down days, we're probably talking about maybe some kind of consolidation at these levels to see if the news continues to improve. We're a little off of 8 billion shares today. So is it going to be a huge blowout like last Friday? The answer is no in volume. But, a little bit of that was taken care of yesterday, and we continue to have at least some areas of excitement going on, which we'll get to. We'll do a little history, and then we'll move on.
And it's all just a little bit of history repeating.
On this day in 1964, the Ford Mustang officially unveiled by Henry Ford II at the World's Fair in Flushing Meadows, New York. That same day, the new car also debuted in Ford showrooms across America, and almost 22,000 Mustangs were immediately snapped up by buyers. Named for the World War II fighter plane, the Mustang was the first type of vehicle that became known as a pony car. I was a Chrysler guy and had Barracudas and Challengers, so I wasn't a Mustang dude. Ford sold more than 400,000 Mustang within its first year of production after, I think, predicting that they were going to sell 180,000. And that was everything that they could build. They went on all the way through 1970, building more cars every single year. And, of course, eventually being in the movie Bullitt, which my brother loved for some reason. I saw it later. I thought it was okay. But I didn't think it was as good as The French Connection, which is, I think that had to come after it. Bullitt was probably, 1968 or 9? I think French Connection was 73. But very interesting movie. And of course, the gentleman that actually came up with it, well, when you work for the boss's son and it's all nepotism, it never seemed like it was going to work out very well for Mr. Iacocca, who I think ended up being kicked out in 1972-ish because almost everybody gave him credit because they wanted nothing to do with it until it came out and became a success. And then the Henry Fords of the world decided they were going to come down and say that it was all them when they would have nothing to do with it or give him any money to make it. And he prevailed anyway. But success has many fathers. And of course, failure is a bastard. But on this day in 1964. Okay, first one we want to look at is Gilead here to see how it's looking. And, you know, you had the big gap higher. You got a lot of volume. You may not hold 80.81, which is the big thing up here, but anywhere in this thing is probably still a pretty decent victory. 85.79. Gilead, at least if you went through the article and what else the author said, is doing everything they can to already start manufacturing ramp-ups across the world. So they must think that they've got a pretty good solution going on here. I don't know what the cost of it is. Somebody asked me that. I don't know exactly what it is. But there's more than one way to skin a cat. This may be one of many different things that works on the same disease. Okay, got some questions coming in. Do you think we can break the 50% retracement from the top of the Dow today? And the answer would every single time be yes to an answer to this question, because the Dow is 30 stocks. And that's like asking 5 people who's going to be the president and then reporting a poll that says you know who people are wanting to vote for. 30 stocks are indicative of nothing. So can there be any number of articles that come out or news flashes that change everything? The answer is it always can. And will it? Again, I don't trade the Dow. I don't spend a lot of time looking at it. I look at the NASDAQ 100 somewhat. But again, 5, 6 companies are the top 55% of the holdings in it? Pretty meaningless. If you're trying to look for meaning, that's one thing. If you're trading on stocks going up and down, all you should look at is the 5 stocks that are 50% of the market of that index. Not a whole lot. We looked at Gilead already. He's got a request to look at Apple here. Apple is talking about their new releases on their phones in September. They opened up the stores in South Korea either yesterday or today. So in some parts of the world, they're getting back to normal or normal-ish or the new normal, depending on who you want to talk to. Down a little bit today, but my guess is that's just where they're trying to get this thing to expire at probably $280 at the close today and wipe out as many options on either side of this as they can. And of course, today is options expiration. There is no quad witching, and you get a little better reads in the market. As we said all week long, I wouldn't be short this market. That if you think that there's a good chance to short it, it is more than likely going to be around the 1st of May, historically, when we've seen big moves. The 2008 move, when I was talking to Tim Ward yesterday, I knew the date right out of the top of my hat because that was the date that I'm going to say became a little bit of famous because I posted a bunch of charts of all the broker dealers and showed how they were all testing the highs on about half the volume, and I got a little juice out of that back in the day. I kind of fame from a spotlight, though, because a big head comes before a empty pocket, generally in the marketplace. Most of the times, I will even say it on the air or in the den, and that is, I will take 5 minutes to enjoy a giant win, and then try to forget about it and get back to work, because you're always one trade away from being incredibly humbled in the stock market. I think everything is okay, Kathy, but I haven't heard anything. No slide, no GLD chart. Okay. Guess not. Let's try that. No, went back to still window. Maybe that's. Let's try it again. Maybe there. Be back in a minute.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Question about Nike NKE, and yeah, I mean, you're up on light volume. You've got two gaps. Well, you might even have three gaps. Take a look here. I mean, there's a bunch of them, but you've got, that one, that's kind of a small one. You got one big gap going back on the 25th higher in Nike. You got the second gap here. That gap is kind of small on the 6th. I think you've got the opportunity, could be one gap higher. the thing I would say on Nike is generally on any stock, if it hits 90, it's going to 100 about 80% of the time. It's the reason why everything ends in 99 cents and 9/10 at the gas station. For some reason, in U.S. psyche, 9 it might as well be 10. Or maybe we've got a national OCD that we want it to see to go to a solid number or something, but not so much from testing that they've done in Europe where this doesn't prevail, but it is a thing in U.S. Marketing that they know of. $90 might as well be $100. You're not going to sell any more or less. Okay. Oh, what else do we have? Is Tesla a three-gap play? Normally, I would say that you'd look for it. Again, every three-gap play in which we had one, maybe John in the den will tell me the stock. I want to say it was Expedia that went from, maybe it was Tesla, maybe it was something else. All I can remember, it was $300, went to $400. And during the show, I said the most bearish thing in the world would be if this thing at 300 after earnings opens at $400 tomorrow and then gives it all up. And yeah, maybe I'll think about it. It was Netflix. Okay, thank you. Those three gaps, you want to see something big, like you've seen here from the 18th to the 20th. And then you want to see one kind of like you've seen here from the 13th to the 14th. There should be one more. I don't see the kind of big gap, dollar-wise, percentage-wise, that would make me say that this move off the low is a three-gap play. I would look for one more gap. More than likely, you're going to see that at the stock somewhere, I think, at 850. When we talk about shorting stocks, was it Tesla? When I've had success, and we've shorted Tesla many times in the newsletters, when I've had success, what I've noticed is that the daily shorting dropped at least a third, if not a half. I waited from Tesla's bi-monthly short data to go from about 40% down to about 23%. And at that point, on the bi-monthly short data, that was a pretty good indication. We also saw a huge spike, and there was like 2 or 3 days when no one was willing to short Tesla. I think it was back, what was it, last year, when it popped up to like 345-ish for a little bit, and we wrote it down to, what, 240 or 220. But that was all. You want to short stocks when no one else is shorting. And unfortunately, everybody's been shorting stocks up here, which is one of the reasons why I haven't been looking at my shoes, and I've been looking up and pretty positive, and don't enjoy the negative waves just at the moment. But 28%, 28%, 29%, 27%, 29%. When those people generally give up is a good indication that it's a good time to short. So even if Tesla popped up, I'd probably, even then, if there aren't a lot of people shorting it, I'd still give it probably 3 days before it rolls over. There's still, it is the belle of the ball when it comes into hated stocks. And just being hated is enough to keep your stock up and going sometimes, because it's so easy to run the shorts. It's kind of how easy it is for Donald Trump to troll people who don't know that they're being trolled. Being a troll is kind of easy sometimes. And I think, again, I think I put it in the den today, and that is, there's a quote, I can't remember who it's from now, but the hardest thing is trying to have a rational investment policy in an irrational world. And that is it. Markets are not the economy, and a lot of times they do a lot of different stuff than we think that they should. The market is right, and we could be right or we can be wrong, but the market's always right. So you want to watch that. Anyway, I don't think that is there. If you want my white paper on 3-gap plays, email me at path@tfnn.com. 20 days of the Bitcoin? Could be. Okay. Okay. Yeah, it was 2013, 2014 on Netflix. But we'll talk about that a little bit more going on. And, of course, sometimes, a lot of times, it's harder to see in retrospect than when you're actually trading it. But you generally want, in a 3-gap play, you want the kind of moves here. So you closed on, March 18th in Tesla at 361. Next day, you open at 438. So that's a hefty gap. Normally, you want to see like 80% of that in the next gap, and then maybe 75% of that in the next gap, or maybe 70, 60. A lot of times, you'll have the first big gap, and it'll be big. You have a good gap, as we had here on the 14th, and then you'll have one more gap, and it won't be tiny. It'll be fairly hefty, but maybe not as good as the previous two. In an up move, it'll be on light volume. And if you go to the FINRA website and start looking at the FINRA short data, which they publish every day, you'll see that people finally gave up shorting it. And then not only do you have two things. One, you have a market that can go down. And two, you don't have a lot of natural buyers that are going to buy it on the way down, and it goes down very fast. One of the reasons why we came off so hard in February is the shorts quit shorting. And that meant that there weren't a lot of people to buy on the way down. And that's where these things moved incredibly fast. People had been beaten into submission into not shorting the market. And when it did crack, that's the way that big markets go down, with very few shorts, not everybody piling on it, because people that have piled on it and have had their been kicked in the privates over a number of times shorting, generally will take a lot less money than the market would go down. The market could go down, and by taking that money early, they tend to slow down the move a great deal. We'll be back after this. We'll look at some more charts.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year, or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year, or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you'd like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com. educating investors.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And we're back. Question is whether or not to make some kind of determination on the TLT. You had a kind of a smaller gap down, but it's actually two gaps that exist back from March 10th and the 9th on the TLT. In fact, if you go back and look at it, there was a gap up and then a gap back down, and that set up this gap that started on the 9th and came back on the 10th. Is that the 10th? Yeah. So you've got that gap, and that's going to act probably as some resistance for a while to the TLT. What you really haven't had after this thing imploded down to 139.01 on March 18th was just the sideways action that 170 area has been resistance. Today, you're not coming off with a lot of volume so far, but certainly looks like that 170, let's call it 170, 150, is the deciding line on the TLT at the moment. You've got this gap higher that looks like it could get filled. That goes back to about, what, 165-ish? I think so. So, I don't know if you could say much more than that. Do we have to go back and retest 139? I think, eventually, yes. In the near future, anything that we could think about holding on for, probably not. I think we're probably, in a lot of these stocks, at least the next couple of weeks, look like we're setting up some trading ranges in the stocks. If the market is going to turn and head south, like I said before, too many times, it's waited until the first week of May. We could do exactly the same. If they're probably going to sell off, the marketeers are probably going to hold it up for a while and sell into it as much as they can, although that may be very difficult. But I don't see any real signal that says the end is nigh. Okay. For the people that had the three-gap play, I'll try to send those right after the show. I'll get those papers out. What's your take on Morgan Stanley from Pete and his brother Repeat? Morgan Stanley. Hey, open up a little bit. Again, financials, broker-dealers, banks, they don't have just a closet with a skeleton in it. They've got it's like the TARDIS on Doctor Who. You open it up, and there's an entire cemetery, and it's always that way. These guys, whatever reason, don't operate like the little bank in Poughkeepsie somewhere. They operate on a much bigger scale. They know much more than us. And they take all kinds of risk and counterparty risk and everything. And as long as things are going good, they get promoted and pushed forward. Eventually, as William Buffett said, you know who's swimming without swimming shorts when the tide goes out. And that's generally a lot of finger pointing. And of course, generally heads that roll aren't the people that set up this problem. They've already been promoted elsewhere because they took the risk and didn't stamp on a landmine during the moment. They've got a second home for skeletons. I like that. We put on the skeleton wing of our mansion here. And
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back. Hopefully everything is working again, but the gremlins are out this week. Pete and repeat. Pete, repeat. We're sitting on a fence. Pete fell off. Who was left? Okay, Pete, associate. Okay, don't get that one. Anyway, we'll get those 3-gap plays out. We'll take a look at the market. Remember, options expiration, probably going to have a little bit going on here into the close. But seems rather quiet after the opening part of the day. But we'll see. Anyway, looked at Microsoft, Apple, looked at the other, we looked at Micron. Let's take a look at NVIDIA, NVDA, right? Same thing with NVIDIA that you saw in Microsoft, which is you're back here to what's going to be fairly stiff resistance levels. The gap down on the 24th of February came down with 22 million shares, got into it with 18.6 million shares yesterday, tried to push it up a little higher, about 9, 10. Now, we'll go to next week, Monday and Tuesdays, options rollover. Not uncommon to see the market push down one day and then recover it the next, or go up and give it back the next. The real movements in markets tend to happen going into the Wednesday of that. Now, of course, we got a lot of earnings coming on next week. Probably be spending a lot more time on those. So you're going to have that through the week. We don't get into fund buying until we're 2 weeks away today from fund buying. So at that point, a lot of new funds coming in, maybe some going out. Hard to tell. But my guess is that this market can probably go sideways at least to May 1st. At least that's my call today. In the meantime, sell when you can, not when you have to. And then we'll see here tomorrow, actually Monday. Same bat channel, same bat time.